All right, let's look at NZDUSD, NZDJPY, NZDCAD, and NZDCHF. Now, this was our analysis yesterday before the market opened for today, and we had two possibilities that we perceive might occur in the market today, which you can see the market broke out to the upside. So we're actually waiting for retracement to join the market to the upside. Okay. But I told us something about looking for higher low and lower high early that will give you a lot of advantage. Okay. Let me show you where I joined this trade from. I joined this trade from around this level. Okay. Around this level. Now, why did I join this trade from this level? Why didn't I wait for the market to break? Now, I'm not advising you to join the trade from this level because you may not be able to see it clearly, but let me draw it so that you can see it. Now, this is, I told us, always watch out for higher low for the bullish uh, setup or lower high for the bearish setup. Now, immediately I saw this first low, then I saw this higher low. Now, I didn't see this early. This would have been the best place to actually enter into this trade. I didn't see this early, but I saw it clearly from this point. So this was a good entry candle. This bullish engulfing candle. Now the advantage of training yourself to see through to see this pattern even before the market breakout, it gives you leverage. Like you can see, at the break of this structure, I have to add another position. Let's go to 15 minutes time frame. At the break of this structure, now I added another position and break even the previous position I entered. Okay, so that is a very good trade. That was a very good trade for today. So what can we do to the pair for those of us who have not actually started trading this pair? Now, where can you actually join this market? Where can you join this market? Okay, the best place to actually join this market is to wait for the market to retrace back to this level and look for buying opportunity to the upside. That is one of the setup for tomorrow for this pair. Just wait for the market to retrace back to this level or to this trend line. Okay, let's wait for the market to retrace back to this level, either to the trend line or to the structure here, the horizontal support or the vertical support. If the market do some level of retracement, then we can look for a buying setup. Now, around this level, look for buying opportunity around this level. Buying opportunity, whether on this trend line or on this structure, you can look for buying opportunity. Now, when should you sell? You only have business with selling this pair when if the markets break through this structure to the downside, then you can actually take a sell trade. If you break through the structure, give some level of retracement, then you can take a sell trade. But for me, I will stick to the buy setup because the market is showing me some level of reversal, even though this look like a continuation pattern, downward trend, upward consolidation. It looks like a bearish continuation pattern. But either way, I have two setup. So if the market break into this level, I will be waiting for the market at the break from this pattern because this is the pattern. This is a rectangular pattern. So at the break of this pattern retest, then I can actually take a sell trade. But my first analysis will be breaking to the upside, doing some level of retracement, then I can take the trade to the upside. Okay, so this is the setup for NZDUSD for the 1st of July. Let's look at NZDJPY. You can see the market has already got to our take profit. So this was also a good analysis yesterday. At the break of this structure, retracement, as you can see it, as you can see the arrow. This was actually our setup yesterday. Break, retrace, and the market gave us a good risk reward ratio a very good trade. This was a very, very good trade. One of the best trades I took for today. It was a straight up market, no much noise. Everything just move to the TP. Okay, so now what can we do to this pair? Now the setup for yesterday, we may have to actually do another setup. Now, remember the first rules: trap the price between support and resistance, then look for a level of break of structure from that level, then look for a retracement, then look for a candlestick, either bullish or bearish engulfing candle for a confirmation. Okay, so now this is my setup for tomorrow for this pair. I'll wait for the market to break from this level, retest this level, then I can target back this level. Okay, that is the first setup. The second setup is that the market can break to the upside, retest it, and continue to the upside. This is also a possibility. Okay, but why will I go with the selling move? Because it's a downtrend. You can see it's a downtrend, and this looks like retracement. It looks like retracement. So it's safer to actually wait for the market to break into this level, look for some level of retracement, then you can look for a candlestick to confirm your entry. Okay, so that is that for this pair. Let's look at the next pair. Now, this market is actually just playing at our setup, but I will not be buying this pair because I don't really like the price action. The price action is just not giving. It's just somehow. So I will not be trading this pair at this level, even though it's giving me all the tendency of going to the upside, break of structure, some level of retracement, but not really a good reason for me to actually trade this pair. Now, let me tell you what I can actually do. Now, once I get this structure, what I will do, I will just wait for the market to break and retest this main zone, break, retest, then I can look for a buying opportunity. But I will not really take the break of structure to the upside. I won't really take that break of structure, retracement, then to the upside. I won't really trade that because this is a bearish market and the price movement is actually not solid. It's just moving, it's just moving. No good proper price action, no good proper retracement. So I will not be taking a buy trade. The only retracement I can see on this pair is this. This is the only proper retracement. And of course, after every retracement, then comes the impulse move. So I will take this as a retracement. I'll wait for the market to break through this level so I can take a short trade. But if the market decides to go to the upside and break to the upside, then I can take a buy trade. So that's my setup for this pair. Let's look at now, as you can see, the market played us so well. You know what I told us about looking for higher high and higher low, and also looking for fake outs. Okay, fake out. Why you should actually wait for um, a full price action retracement. As you can see, the market actually caused a lot of liquidity at this level. Okay, a lot of liquidity, and most traders don't happen to see it before it it happens and move against them. So that is why I always advise you to look for the possibility that the market can break to the upside or to the downside, and make sure you take a good trade. Okay, so this is my setup. What's my setup for tomorrow when the market open in the next few uh, hours? Now I'll be waiting for this market to retrace back to this level for me to take a buy trade. So I will wait for this market to retrace back to this level before I can consider taking a buy trade. But what I'm thinking, I think this is a reversal and the market wants to go to the downside. Okay. So, but let's see what the markets will do. Remember, this video is for educational purpose. So do your own analysis. Let's see what you can get out from this market when the market fully open. Okay. All right. Take care of yourself. Subscribe to this channel for more analysis. See you in the next video. Bye. Before I go, remember this video is for educational purpose only. So do your best to do your own analysis, and I believe we can become better trader when we keep studying. Thank you for your time. See you in the next video. Bye bye.